Righty. Welcome. Little hectic right now. Um, got really lucky here. Caught this short. Um, actually, a rare. I was long. I was long. Get a chart we can share here. Sorry, guys, I'm really out of sorts here. This is a brand new way of streaming on YouTube. At least we got the audio working quickly here. Yay. 4 32-inch monitors, and I'm totally out of real estate here. What was I doing? Oh, I'm gonna share a chart. I'm sorry, guys. All right, here's a screen. Let's find a chart. One second. Let me make sure I'm sharing what I want. 3-minute ES. Yeah, that'll be good. So wow, grind up day, get a little bit of stagnation, and then absolute rug pull. So I got long 11:54, 11:55 my time. So probably this little pullback right here. Yep. I was long. This is a very classic RTH NADRO trade. Um, I really liked the order flow there. I liked how the buyers were really starting to get aggressive and push here. And I'm telling you, something just changed, right? It was nothing that I could see coming in advance. It was not a pre planned trade. Yes, did we get to a key area, right? We got a zone here from 86 down to 29 we can draw. Right? We got an area below there from, call it 3,700 down to 65. So I know that this looks like a lot of colors and looks messy. This is old. I just hadn't deleted it because I was trying to reference it for some students. But that's what held low of day. This was an interesting inflection. That's why you see me scaling out more heavily in the screenshot I tweeted. This looks really messy to read, but to me, it's clear. Structural area here, right? Pushing into that overnight, can't get into it, and then the break into it here. I was getting onto one of my traders for too many shorts in this area. I think that was not smart at all. Then we reach a destination area, right? I agree that this was a bearish inflection into the close yesterday overnight, but not once we break up into here. We zip through. These yellow areas are interesting. They're structural weekly areas. Anyways, I'll shut up about markets. Let's take some questions. Let's talk to you guys. If you want to talk more about the S&P, we can do that. If you have questions for me, we'll hop into those. Alan says, so please explain to us what got you short. It was purely speed of the tape. It was purely, well, not purely. It was a couple of things as I collect my thoughts. One, we'd reached a destination area. 65 is a structural area. 68 is an extended area on another time frame. We already knew that one time frame is offering, a bearish general area, but not, there was no supporting cast for that, which is again the conversation I have with one of my traders. So the order flow looks good for the bulls at that moment in time. I got long, looking for new highs, looking for continuation, knowing that I'm running out of room. But hey, today's kind of a big catalyst day, red wave, blah blah blah, whatever's going on, we could press for more. So I said, let's be cautiously long here. I did so. And all of a sudden, boom, something is wrong. Speed of the tape, aggressive selling, right? Fast pace compared to what we were seeing, order flow dumping. Hello. Not only did I want to be out of that trade, but given the trade location at this point in time, the destination area, which is not like a real trade. I was trading the other way, right? Destination area plus what I saw on the tape, I just stopped and reversed. I did. Full size from long to short, scaled out healthily. Then, I had the 5 contracts on, which I still have on at the time I posted the screen share. Alan says, when do you use RTH versus ETH, development value, to enter or exit trades? Most times a level lines up with DVA perfectly on either RTH or ETH or RTH. Do you use them interchangeably or only when PM is blown out? What could PM stand for? M. What does PM stand for? Alan? There's a delay, so I have to wait for Alan to answer the question by the time you hear my voice and can type it out. Pre-market. So no I don't know what pre-market being blown out. I mean, I have plans for if something gets blown out, I typically want to go the other way, things like that. Anyway, so when do I use ETH versus RTH? I use them both all the time. I lean more heavily on ETH for most of my decisions. But I'm always glancing back and forth, assessing if they're in agreement, if they're in dissonance, what's going on. It's not one being magical, over another. It's not one that's better than another. There's just times where, for example, if you have a really volatile overnight session, the RTH can kind of dial it in, because the only difference between, essentially they're 2 different anchored VWAPs from different times. One is shorter. It's from a more recent start time, which is RTH. One started, I start mine at the exchange reset the night before on ETH. So one is encompassing a lot more activity and can be wider and less fitting to what's happening right now, especially early in the session, and especially when you had a wide overnight ranging session. But in general, I use them both all the time. But I lean more frequently, more heavily as a focus on ETH. I'm actually not sure how to say this name. Matthias or... No, it's not Matthias. Matthaus or Mathaus. I'm sorry, I don't know how to pronounce it. Hey, Merritt. How are you mentally preparing for trading? If you guys tune into my Back in the Black, every other Monday video, I give you a tidbit about the things that I think about in terms of things that I hold to be truths regarding mentality, psychology, things along those lines. But preparing mentally is really important. Too many traders, most traders, they just want to hop in. They just want to start looking at charts, start putting on trades, and get into the action. I asked a question the other day. Maybe we won't go down this rabbit hole, but I asked a question the other day, a very specific one. dollar amounts. What is a minimum kind of dollar amount that would be acceptable for a beginning trader to say, okay, I've graduated from sim, it's time to start trading live. You know, and there was 55 initial comments, not total comments, on this question that I asked, and very few direct answers. I find it weird how people don't answer the question. They want to talk about other things, namely about feeling, about emotion, about percent of account, or around a lot of things that are not dollars. And my follow-up tweet to that was, wow, turns out amateur traders need trading to make them feel something. They think that's important. Crazy. I mean, I was blown away at these answers. I can be a little bit more of a robot, if you will, emotionally than some, but I can be emotional. I'm not an android. Back to your question. How do I prepare mentally? I like to connect with longer term goals. I think there's a benefit in doing that. If you just do goal setting as like a once a year thing or something you did 3 or 4 or 5 years ago, you're not connecting with that emotionally. And you're missing out on some strength that you could draw upon to do the things that align you with really the direction that you want to be moving your life and your trading. So I think connecting with goals on a more frequent basis can keep you a little bit more on that straight and narrow, let's call it, right? To say it in a way that I don't really want to say it, but you'll understand, is it can help you be more disciplined, right? That's a topic for another day. I don't believe in that way of thinking, but that's essentially what I'm saying. Another thing you can do is simply assess, where am I coming into today with regard to confidence? Have I gotten beaten up lately? Am I underconfident? Guess what? I need to give myself a little extra oomph and really go for my trades and be aggressive and do the things I should. Put on enough risk, put on the trades that are there and not hesitate. If I'm overconfident, guess what I need to do? I need to kind of do the opposite. I need to bring myself more towards the middle. That sweet spot of confidence. I need to say, all right, things have been going really well. You feel like you can't miss. Let's really buckle down and stick to a good risk plan. Let's make sure that we're following all of our rules. You know, if I have like a 3 strikes and out policy, whatever it is, let's make sure I'm not too cocky for that and my risk gets away from me, is one of the biggest things. That I don't think I'm better than my process. I can kind of create setups out of thin air. No, you're not that good. Your process is what has you trading so well. Let's do more of that. Okay. So things like that, and then obviously getting to a place where you kind of connect with your review work from the prior day and you have kind of a process goal, something that's really within your control, something you can focus on and doing well. That's not P&L based. That's not outcome based. That's important. So in terms of this trade I'm in right now, I kind of don't want to see us really hold much beyond low 3840s. That's being a little stringent, but this essentially where this pullback high is stopping at the moment. I'd like to see us turn from there. We might probe and wick RTH VWAP right there a little bit, but for me, that's kind of what I want to see. It's not ideal. This trade's already kind of played out. The traversal from 65 down to 29, the move's done, right? In terms of structurally short term. So, you know, I've scaled out heavily, so I still have the 5 contracts on. I've not done anything with those. Got about $5,800 of open P&L on it right now. You know, it was almost twice that a while ago. I'm seeing if we can get lucky here. To me, it's like a trade I shouldn't have even been in the first place. Not shouldn't have been in, but you know what I mean. Like not like it's an error, but I'm just lucky to be in this trade. I'm lucky to have taken the profits that I have, and so I really don't have much of a process for managing a trade like this because it's more of a scalp. Okay, so it really worked really quickly, really easily, directly, no drawdown, and it's kind of reached a target area, and so I've scaled, and I'm just kind of feeling it out here, seeing what happens with the rest of this. Again, I'll exit if we just start. We're at 38.40 now, so we'll see what this looks like. All right, next question. Aco says, just started the trout. Any tips on trading the second half of December? Do you do anything differently? No, I don't. I get that question every year about this time, about holiday and trading through the holidays. Guys, volatility is here. You do not have to worry about, you don't need to take a break. You don't need to take a break during the summertime anymore. You don't need to go on vacation just because the markets are so dull. That doesn't exist anymore. Markets are moving all the time. So opportunities are present. A little bit of selling here, pushing us down. Kodakji. A lot of interesting names here today. Welcome everybody, all over the world. How cool is this? That we're all here communicating all over the world. It's amazing. Kodakji says, hello, would it be okay to use weekly or monthly VWAP on a 3000 volume chart? I use intraday but don't work that well. Look, if intraday VWAP doesn't work for you, any other VWAP's not going to work for you. It's just iterated across different time frames. Maybe it's the intraday trading, the shorter term, quicker decision making, in and out types that trading that doesn't work for you. But it's not VWAP. And VWAP's not going to be superior on any other time frame. So I would approach it more from that perspective as you figure that out. Any common ways, Anthony says, any common ways you look to adapt the way you engage with ideas when liquidity is lower, such as in this current lead up to elections? Is liquidity really low today? I couldn't tell you that it is. I mean, liquidity over the past, since 2020, I think, has been lower, but that's a good thing, We don't want to trade these markets that are super thick and stuck in the mud. There's a reason why most of us don't trade fixed income products, is because most of them are just one tick up, one tick down, one tick up, one tick down, for hours on end. They can move when there's a catalyst that moves them, but it's a lot of muddy, sticky, yucky trade. I like thinner markets. So for me, it's just better conditions. I came from, trading currencies back in the day when all of a sudden, for the first time in forever, all the quantitative easing and lower interest rates around the world started happening, so things were moving. I then started trading the Russell, which was a faster moving market, the old TF, back when it was on the CME before it went only to ICE, and then now the CME brought it back, the RTY. Crude oil, thinner market, faster moving market. And now lately, I traded a lot of NASDAQ. I specifically am designing an algo around NASDAQ trade. So I like thinner markets. Sorry, it feels like something's crawling on my leg. Just a phantom. Phantom. No, this is not a green screen. It's actually, it's real. You want to go hit a putt? Good if it goes. Good if it goes. All right, what'd I miss? All right, nothing. All right, next caller, please. Who remembers that skit? I really like. I used to laugh at that pretty hard. Hey Merritt, can NADRO Raphael says, hey Merritt, can NADRO methodology be used to trade SPY equities? If yes, what would be a corresponding equity for crude oil futures? Well, there's no equity, right? For something like crude oil futures. But there are ETFs and ETNs and ECNs or whatever. Let's just say ETFs, right? So something like USO is something to look into. But my goodness, guys, the trade on those is not. It's not as good. I don't understand why anyone would purposely say, "Hey, I'd like to trade crude oil. What can I trade that's not crude oil so that it's like I'm trading crude oil?" Just trade crude oil. If the risk is too high, trade the minis, QM, trade the micros, MCL. Trade the real thing. Alan says, could you talk about profit factor and it's important in determining if process. I'm sorry, I lost the question here. You talk about profit factor and it's important in determining if a process has an edge. So let's be clear. I could be wrong here, but my definition of profit factor, some people get it confused. Profit factor is over the period, and I am watching this trade here, not as much selling into this important. Just took 2 more off, 3 more off. This keeps pressing here. I'll flatten out. So profit factor. Let's go over here. So if you start trading and you make some money and you lose some money, this is a cumulative P&L curve, right? And you make some money and you lose some money and you make some money, right? And you'd say, okay, here's my starting balance of 0. This is not going to be a great profit factor, right? Because think about it. Profit factor is the cumulative gains. Here's some, here's some, here's some, right? Undo button. Yeah. Here's some gains, here's some gains, here's some gains, right? So this much, this much, this much. And then we had this amount of losses and this amount of losses. So this amount of losses and this amount of losses, right? What's the ratio of these two? Wow, look at the selling in the S&P. Well, that's going to be like 3/2, right? What is 3/2? 1.5. I'm sorry, I'm stupid. That's going to be like a 1.5 profit factor. That's what profit factor is. How much were your total just only gains as a ratio compared to your losses that you had on closed out trades? Some people think profit factor is your average winner to the ratio of your average winner to your average loser. That's average win to loss. That's win-loss ratio. That is not profit factor. So we could make sure that we're talking about the same thing here. I consider taking off here. So profit factor, that cumulative gains versus cumulative closed losses. To me, it's a measure of just the just how much you crushed it versus how much maybe you got away with some profits, if that makes sense. If you have a really high profit factor, it means your overall risk reward is better. It just means that your overall, you're not drawing down a lot to make, it's almost like a risk adjusted factor of the program. So it's something that's healthy. I've never been a big profit factor fan. I know that maybe I should be. Maybe a lot of smarter people than me are. For me, my favorite ratio along those lines is a little more simple for me. It's the maximum drawdown that occurred. The worst drawdown of your equity curve, okay? It would be from here to here, right? So whatever that number is, let's call it a 2, okay? Minus 2 relative to I'm sorry, I did it backwards. It's P&L over the max drawdown. So in this case, if we made from here to here, well, that's more like, let's call it 4. So you have a ratio of 2, in terms of absolute value of how much you made versus how much you drew down. I like that simple, clean ratio. Profit factor, I guess, does maybe the same thing. That's just not my forte there with some of those statistic things, but I do get enough to take some off there. I'm down to 1 lot here. I mean, pretty much out of this trade. Nice trade. What do you think the main difference, the nuance? Well, this is another question from the same person. Let's look for other questions from other people. Yash, look at these names today. So cool. Okay. UFFFH. That's not a real name. If it is, I apologize. Maybe I shouldn't say that, but that looks like. Anyways, Yash, what would you recommend trading for SPY? ES futures or SPY options or straight QQQ ETFs in terms of cleaner action and liquidity? I don't think you can beat the liquidity of ES futures. And I'm not sure about the options. I'm not sure if SPY options or ES futures options have more liquidity, but they're both big juggernauts, so they're both fine. NQ, on the other hand, runs into some problems with options liquidity, but it's still tradable. Does NADRO work on trading stocks? Asks Mimic. Can't find anywhere that someone is using market profile to trade stocks. You certainly can. You certainly can. How we teach people to look at VWAP is very powerful. How the price action patterns that I teach, assessing multiple time frames, using market profile, or volume profile. If I was trading stocks, I'd probably use volume profile. Probably just because it's a pain in the butt to adjust that TPO tick size when you go from a $1,400 stock to a $14 stock. It just changes everything. And so you got to adjust the tick size. It's so annoying. So volume, again, I'd probably want to adjust the tick sizes there, but it's not as bad. Cumulative delta, that's a problem in equities. There's in equities, there's often a spread between the bid and the ask, and so you run into poor measurement at times between Well, was that into the bid or was it into the ask? Well, it was a white print. It was in between the two, right? Like it's not that cut and dry. Did you truly lift an offer? That's, aggressive order flow. So Delta gets really wacky on equities. I know some smart people who are like working on, ways to look at it that's a little bit different. Um, Footprint charts, you often want to, they're really like spaced out and thin and nasty looking. You want to condense them and average out the tick size instead of every penny, make it like every 10 cents or something. Again, $1,000 stock versus a $14 stock, you're going to have to adjust what those look like. So it's a real pain in the butt to get your charts real nice for stocks, but most things NADRO wise, you can absolutely use on equities. There's just some fine tuning as you jump around name to name how you want those charts to look. But the concepts, the principles, the frameworks, everything applies. Here's an interesting question. Hey, Merritt, are you mad at people pirating your course? Yeah, I mean, it's going to happen, right? I entered this world eyes wide open in terms of education, trading books, trading courses, you know, um, it, CDs. That the world pirates intellectual property. We know that this happens. Um, so I guess my expectations that it was gonna happen kind of prevented me from being mad about it. There is. I'm not gonna mention names here, but there is one person in particular that seems to be like they're kind of successful with their education business, and it was a student of mine and they absolutely ripped me off. I think they're trying to be a little more clever about it now, but they suck. They're a joke and they make me mad. I would like to go after them, and maybe we will. How does order flow enhance MP? Order flow doesn't have anything to do with MP, so it doesn't enhance MP. It might enhance one's trading who first looks at MP and then looks at order flow, but it's really just looking at two different time frames, two different tools which give you view into different time frames. MP is going to be more contextual. What can we see structurally? What's going on? Order flow is going to be the moment to moment, what's happening within the context of the market profile. So it's really the same concept as using a 15-minute chart and a 1-minute chart. 15-minute chart for higher picture levels, 1-minute chart for entries and risk and patterns and things like that. Kareem says, what's a good I know you must be asked this a million times, but what is a good risk reward ratio for ES and CL? There's no answer to that. There is no answer to that. It depends on you. It depends on you. Some people structure their trading where I don't recommend people take this path, but some people structure their trading where they're right a lot, they're correct a lot, high win percent, and no. Alan, no, not that person. I'm not even going to say the name. That person's a good guy. Um, I will say their name. Taylor is a good guy. He's not who I was referring to whatsoever. Um, anyways, you can structure your trading to be a million different things. You can structure it with high win percent and lower risk reward, or you can structure it like I do, bigger risk reward, but I'm only right just less than half the time, on long-term average, right? It's very common for me to have a low 40 something percent win percent. Just ballparking that. Obviously it fluctuates, but I'm just giving you the big picture. But really good risk reward, right? So, I have trades where, I on the intensive, right? We had, I think, a plus 12R trade on, I think, a Thursday of this most recent intensive, and we traded live. So it's not talk, we walk the walk here. Kulu, what's up, my man? He says, as NADROans, we trade at the edges of value. It's part of our edge. That is low value nodes. You mean low volume nodes? What are some of the reasons for this compared to HVN, excluding VPOCs and POC? I'll say including VPOCs and POCs. I believe that price action is messier, choppier, more unpredictable. It's always unpredictable, but I think it's more unpredictable, harder to give a good clean line in the sand, a good risk reference, which is half the equation for risk reward. I think that's harder to do in high volume areas, even POCs. I just don't think that I can be as successful trading from those areas. So when I can, I look to trade from not those areas. All right, guys, we've gone over here by about 10 minutes. Pretty much out of this trade. We've got a one measly lot on here. See what we can do. Interesting spot. The tape is still not accelerating like it was earlier. We're back into kind of this overnight distribution, if we could draw that, right? I'm going to call it here. We're back inside there. It would make sense to see if we press that edge. This little level here at 17 is of interest, so we're touching that now. Again, weaker selling. The most traded price of this week right here is 17 area. So again, this is just a reversion at this point in time. Okay, guys. Thanks for hanging out today. Nice crowd today. Nice unique names asking some really good questions. So I always appreciate you guys. And we'll see you.